It is time to get to that big consumer voice. Godrej Consumer is the stock on the radar. Consumer is the sector on the radar. And it's an interesting time to be talking to the company. Of course, the third quarter wasn't the best for Godrej Consumer. How are trends looking now, and what should we expect as the new year rolls on? Well, that's the question that we're going to put to Mr. Vivek Gambhir, Managing Director and CEO of Godrej Consumer Products. Thanks very much, Mr. Gambhir, for joining in. Good morning to you. First things first, so, I would be candid on this. I think that 1% volume growth was a big disappointment for a lot of, your stakeholders. Have things improved in the fourth quarter? How is the general environment?
Yeah, good morning. I think clearly, while we were not particularly happy with our performance in quarter three, the numbers for quarter three should be viewed in the context of a 2-year CAGR, simply because we had GST rate cuts in the base. But if I look at our performance over the first 9 months of the fiscal year, our volume growth was about 8 to 9%. And so it's been a very healthy volume growth. If you look at the performance over a 1-year CAGR, 2-year CAGR, 3-year CAGR, across the board, I think our volume growth has been industry leading. So I wouldn't place too much upon, one quarter's performance because of the challenges in the base. Having said that, I think we are continuing to see good momentum and recovery in volume growth. And we are looking for a high single-digit or double-digit volume growth going forward.
Okay, good morning, Vivek. It's exactly the record that you all set in terms of 2-year CAGR and 3-year CAGR. That has worked its way into the stock price. It becomes an expectation. The 2-year, 3-year CAGR were so distinctly and, mid-teens in terms of volume growth. Do you think you get there? Is it double digits this year itself? First, do you have to be middling in terms of a 10-11% for some time before you get to the mid-teens?
Yeah, I think if I look at the outlook for next year, we are targeting a high single-digit or low double-digit volume growth. If we can get that kind of volume growth, and if I look at the last 3-year CAGR for the FMCG industry, it's actually been a 6 to 7% volume growth.
That's right.
So if we can get to a high single-digit or double-digit volume growth, that will be a significant improvement versus what the industry has seen over the last 2 or 3 years. If we can get to 9 or 10% volume growth, that will create the platform to drive much stronger growth in the years ahead. But given our innovation agenda, given the great work that the team is doing on distribution, I feel very optimistic that the business will perform better next year on a volume growth basis. And if we do that right, then the platform is created for stronger growth in the years ahead.
Can you give us some color on how things, literally some color on how things have panned out in the current quarter, in hair colors, in insecticides, in soaps?
We've seen a gradual recovery in demand, and that's been playing out over the last 3 or 4 quarters. And so it's been a steady recovery. Our expectation is that we should see a much stronger uplift from rural consumption and rural growth next year. As we know, nominal GDP growth for agri has been at a 10-year low. The agri incomes have been under stress. However, in 2018, we saw a decent recovery in FMCG growth, largely on the back of GST rate cuts and restocking in the trade post-demonetization. Going forward, as we look at the impact of the Pradhan Mantri Kisan Samman Nidhi, farm loan waivers, some of the direct income transfers that some states are doing, we do expect rural to be a major growth story for next year. Though I think it will take a couple of quarters before it starts playing out, because it will take some time for disbursements to take place. So our expectation is that for the next 1 or 2 quarters, it will be more or less the same for the industry. For rural, you actually might even see a small dip in volume growth for the industry because the GST rates are in the base, the restocking is largely done. So our expectation is that, while the next couple of quarters might actually be more or less of the same, in the second half of the year, you will see a strong volume uplift in rural.
Okay.
And if urban continues to show steady recovery, next year ought to be a much stronger year for the FMCG industry.
Okay, so you're saying the next couple of quarters could be equally challenging as Q3. Now, if sales are going to be fairly muted, then, you know, let's
Not for us. I was talking more about, sorry.
Industry.
I was talking more about the industry. See, yeah, because see, Q3 for us was an aberration given the base. And so for us, even in Q4, the volume growth will be much, much better than what Q3 was. That's a given. But I think the issue is much more from an industry perspective, what will happen.
What about margins, sir? How have input costs behaved in the last 3 months, 3 odd months gone by? And what should we expect there? And also, since we're talking costs and inputs, well, let me also throw in the point on advertising. Are you looking at a bigger spend as we get into election season and, you know, to sort of get a greater pie of this rural wealth which you're looking to capture?
From a margins perspective, I think input costs have largely been, you know, relatively benign. We're not seeing any significant movement in things like crude oil. So we are relatively comfortable that we should be able to actually hold our margins, which are at an all-time high. So on the margin front, not too much of a worry. And there are plenty of cost reduction projects that we have in place to be able to deliver strong, profitable growth. On the innovation front, clearly, you know, our objective has been to be the innovation leader over the last 2 or 3 years. We've maintained a very consistent rhythm of fairly disruptive innovations. Even next year, the plan for us is to launch 6 to 8 major innovations. So every quarter we will launch 2 or 3 new innovations. We are going to be careful to not try and put all of them together in one quarter, simply because it's more important to phase them out. But the innovation agenda is very exciting across all the categories, but we're not necessarily planning a significant push prior to elections. I think that's a one-time event. The focus far more is to look at the entire year, and we'll invest very competitively in brand building.
Okay. Do we hear an acquisition anytime soon?
I think, Lata, for the time being, our plates are full.
Okay.
The current core business has tremendous headroom for growth, plenty of opportunities. If something comes along, we'll look at it closely, but no plans yet.
All right. We'll leave it at that. Vivek Gambhir, it's always a pleasure speaking with you. Thank you very much for laying out the terrain, not just for Godrej Consumer, but for the FMCG sector itself.